All right, I'm going to go over the review for today. In the Discord around 9:30, I mentioned that the market opened way up today. So we opened about 40 points above yesterday's close, and I was talking about how when you have a big gap up or down, there's an increased chance the day is going to be a trend day. So I mentioned that in the Discord. Today was really mostly a trading range. There were a couple trending aspects to it, like during this period and through here. Really, though, it was characterized as a trading range. I wasn't too excited about any trades during the open. And I think this open reinforced the idea. Well, I think this open took away from the idea that it would be a trend day. So if you look at these two bear bars, that's a trending market. Those are two trend bars, two large bars. But then instead of getting more follow through, we got these three bull bars here. And instead of those bull bars having more up, we got some bear bars down. And then each leg just kept reversing. And when you see that, that's a sign of a trading range. We also have tails on the bottom of bars and tails on the top of bars. So that further reinforces the idea that it's a trading range. So, we had a higher probability it's going to be a trend. But then as we get more bars, more information, it transitions into being more of a trading range will be likely. So when you have a trading range starting to form, areas like yesterday's close are even better spots to buy at. So even in a trend market, this close is going to act as a target. But when you have these big pullbacks here like this and this, that increases the chances that there will be buyers at a target like yesterday's close or like at the 200 moving average. So when we see there were buyers right at yesterday's close, and the market will often do that, the prices from the previous day will act as, it'll be a target, so the market will sell down to it, and it'll act as resistance when it gets to there. I have two trades marked on the chart. The first is a sell below this bear bar. And I like that trade going for 5 points. So you would sell below here with a stop above, and you just go for 5 points. And two reasons. One is that we look at the two bars, look at the three bars following this bear bar. Look at the three bars preceding this bear bar. We have this breakout below the moving average here, pulls back to the moving average here, and then we get a bear bar below it. So now we've had two consecutive bars where the entire bar is below the moving average. And then you have this bearish signal bar, big tail on top. It's coming up, testing the moving average, then going down, and it's closing near its low. You can also see it's a second entry short. So we have a low here, pullback, first entry short, pullback, second entry short. So with this being below the moving average like this, and with the target below, I think it's reasonable to try to sell to go for 5 points. And that would put you right around down here, right above the close of yesterday. Looking at this next entry, this entry is coming off of a sharp failure on the bear part. So the bears sold down to yesterday's close, and then we got the biggest bull bar of the day with follow through. So the bears that were selling in here, like if they sold this close, for example, then they're trapped in the trade. They're selling here hoping that it's going to be a failed breakout of yesterday's high, and then we're going to trend down for the rest of the day. However, they failed. Now these bears are trapped. Now bulls are taking over. So after this first pullback to the moving average, you have this bullish signal bar. And because the bears are failing, they're scared. Imagine your emotion if you're selling here, and now you've had two bull bars and a pullback and a bullish signal bar above the moving average. You're scared, and you're probably going to be getting out with your loss. I don't think many traders are going to be holding after this signal bar here. Some might, some that sell here, they would say, well, we've had these deep pullbacks, trading range price action, so maybe I can sell here, and I can hold through a pullback, and I could sell more higher up here and get out break even. And ultimately, they were able to do that. However, I think most traders that sold here, they'd be wanting to get out above this bull bar. So if a lot of people are getting out above it, it's reasonable for us to be getting long above it. So I think buy there, try to go for 5 points or so. You could also do a swing. So you could buy here, stop below, and anytime you have trapped traders, like the bears here are trapped. Anytime you have trapped traders, that increases the chance that a swing trade against them will work because they're rushing to get out of their trade, and that creates a lot of buying. So here you could have gone for something like 2 times your risk. You could have gone out there. You probably could have gone for more up to the open of the day, although you can see it didn't get up there. The next few hours were sideways. There's a couple buys that may have worked, like buying above this bull bar. So this buying here would be good because you have a potential double bottom off of this low. So you would have 2 legs back to the moving average and a double bottom. And I think that's a reasonable buy. If you watch the moving average video, this looks similar to what we discussed in there on how to trade moving averages. So if you're buying above something like this, double bottom, 2 pullbacks, two leg pullback to the moving average, you can be buying above that, but you want to be trying to go for a swing. For example, I didn't take this trade here because I more often like to go for 5 points. And I felt like my risk would be too big, too much trading range price action. But if I was to take this, then I think doing a swing trade would be better, trying to get out up here. And that's kind of similar with either buying above this bull bar or this one. You're high up in the trading range, so you need to bet on a breakout, and most breakouts fail. So if you're taking this trade, you need to be trying to swing. So I can put that in there too. Maybe you structure it like this. So I do think there were some buyers here. I think it's reasonable people would buy here or here or here. So if buyers are starting to accumulate here, and then they're starting to fail over these 2 bear bars, well, it's going to be a similar situation to what we had through here. People were selling, but they got trapped into these bad shorts. And then through here, people were buying, and they were trapped into this bad long. So during this area, I was thinking there was a good chance the market might reverse down from here. And you could see possible triple top with like this high, this high, this high. And bulls that are buying here, they're really expecting the market to go straight up. I mean, to me, if I'm buying through here, I'm expecting that follow through to be pretty immediate and pretty quickly just break out and go up. So if I'm seeing that breakout fail, and I'm getting these bear bars like this, you can see the first bar was a doji, so not the best follow through. Then a bear bar, then a second bear bar. That's disappointing follow through, especially in this context where I'm really needing the breakout to happen right now. And since it's not, I think a lot of bulls would be selling out below that bear bar. So just like we were talking about over here, when you have trapped traders, uh, there's often a good chance you get a swing trade out of it. And you can see this big bear bar and then a second big bear bar. And to me, that's because we had all these buyers in here that were trapped in, and they got out below this bear bar and then below this bear bar. And I think, you can go study any chart. Like, this is the way that you can review the day. Look for these big bars like this, and then look what preceded it, and think, well, were there trap traders? Probably. Like, if you're seeing this breakout like this, then maybe there was a news event, but actually more likely there were just a lot of buyers that got out, and what caused that big bear bar. Another thing, we had 4 bear bars down here, and because of that, we can expect at least a little bit more down. Well, pull back a little bit more down. This is kind of the minimum of a second leg that I would expect. And then ultimately that a larger second leg down failed at the low of the day. And from there, we just kind of went sideways the rest of the day. That's all I have. If you guys have any questions, leave them in the comments or ask them on the Discord, and see you next time.